everyone. This is the last panel of our session today. I'd like to call in Biju Suresh, MD, Banking and Financial Services at Fiorano. Biju, can I have you on stage, please? Can I have Priya, Guliani, EMEA Director, Government Blockchain and CEO of EarthID. Priya, can you join us, please? Can I also have now Richard Mould, Senior Strategy and Policy Lead, Open Banking Limited. Richard. Can I invite Vinita, Ramtri, expert digital transformation and embedded finance, to join me on the panel as well. Welcome and thank you, everyone. I think we've had some interesting conversations around core banking, and we've also touched upon open banking, right? So. Just wanted to start with how important open banking is, and I've been doing some research, and we've been doing some research around that space, and some recent data from OBIE just told me that open banking, which started 5 years ago, has almost 7 million active open banking customers in the UK. In terms of the growth, the transactions per day, from 25,000 in 2020 to almost 200,000 plus every single day, right? So, I think open banking and the Institute has done a lot. Now I think I have the panelists over here to talk to me about how do we unlock the potential of the good work that has been done, right? So, Richard, if I may start with you, right? Why is open banking such an important trend for everyone to look out for, right? And how likely is it to change banking as we do it?
Thanks. Is this working? Yeah. Right, we've got the graveyard slot. There's just us between you and your lunch, and I'm not sure I'd call open banking a trend. Actually, I think it is a reality. You've given us some numbers. In the UK, 7 million customers. I think we've got 90 banks connected into the system, hundreds of TPPs, and then they serve thousands of fintechs developing new propositions for customers. So I think it's just a reality, and it's a global reality. We're quite fortunate in the UK because we're at the forefront of that, but it's a phenomenon, because I can't use the other T word, and I don't like saying the word phenomenon, it sounds quite good. It is regulatory driven, but effectively it's putting in some building blocks to allow banking to change, and that's why I think it really is important, because key thing is banking's really boring. Customers not bloody interested in it. Well, probably us in this room, we're geeks, we quite like it, and you do want somewhere to put your money, or you think about this, but actually customers want to buy stuff, they want to have experiences, they don't want a mortgage, they want a home to live in. And I think for too long banks have said, here, this is your product, go buy it. And I think that reality is changing, and I think open banking is a key part of facilitating that change. Because open banking does two things. It allows the sharing of data more easily. So I can give some data so somebody else can make some decisions for you, so something that undermines a competitive advantage for incumbents. Or it allows you to initiate action. So really, if I do want to buy that 50-inch TV and I don't quite have the money for it, I don't really want to go in and then I think about the loan. It's just part of the experience of that, and you can embed banking and finance in the background so it's invisible to customers because they don't care about it, they just want the experiences. So I think open banking facilitates that.
Thanks, Richard. So, Priya, picking up on what Richard said, that it's facilitating, enabling. So, open banking is enabling, and banks need to be a part of the larger ecosystem, so that there's no, banks are not operating in silos, right? So, what's your reaction to that?
Amit, I think I've always responded to collaboration with a big yes. And I think open banking, as Richard really explained, it's a reality, it's a novel concept, but I also want to take a look at it from a global perspective. It hasn't, for example, picked up to an extent that we all would have wanted open banking to pick up. And I think that's primarily because of the nature of the industry, as you point out, that we operate in silos. And don't get me wrong, I mean, I'm all about competition, right? Healthy competition, which basically empowers organizations to identify what are the new ways, innovative ways to actually capture new customers, retain existing customers, and provide them good value. Intense competition, however, can, for example, make you go crazily after just profitability or achieving new customers. And that could basically lead to you taking away the sight from your existing customers, and that would then manifest into longer queues, slower response time, low transparency, and things like that. Open banking, as Richard mentioned, is a huge, huge opportunity to unlock numerous ways where we can work collaboratively. Financial institutions can work collaboratively with fintechs to unlock opportunities like digital payments, advanced digital payments, automotive asset investments, etc. And those are some of the opportunities I think that we should be using to create new innovative solutions for our customers. And then having said all of that, of course, banks would still have to navigate complex regulatory compliances as well as meet data privacy laws and regulations. So all that is really important as well.
Vinita, to you, right? We all spoke about, even Priya spoke about opportunities, and then we've been speaking about monetizing the new revenue streams for banks, profitability for banks, and I believe that open banking does provide that opportunity for unlocking APIs, and so some of your thoughts on new revenue streams coming for banks through all of that.
Thanks, Amit. And I'd agree with Priya and Richard. And the point here being that often, to some of the what the previous panelists also discussed, a lot of this is not just purely looking at one thing in isolation. So we can talk about cloud, and then we can talk about open banking, we can talk about AI. But the main thing comes down to not just these single instances, but the leadership to be able to triangulate between all of these. So open banking makes it possible to say, okay, here is the data, right? But what are you actually going to do with the data? What's the proposition? How are you then going to maybe plug in AI to then do what's right for the customer at that point in time? And how is it adding value to anyone's life where I'll be even willing to pay 30 pence for it? Why would I care? So why would I care to integrate my account with another account? Because what is it doing for me? And I think that's where very often banks, in my experience, sort of miss that beat to just tick the box, saying, okay, the regulator requires me to do X. So there's a separate team that's maybe working on open banking compliance, right? Then there's a separate team working on innovation. But that team's probably not talking to the open banking reg compliance team to say, okay, if this is going to be required, so we need to do A and B, but actually, can we innovate on A and B and add AI to that and then add whatever else to that? So then here is a proposition. And so there is a lot of ways to make money, but again, it's about starting from what does the customer actually need? What's the problem we're trying to solve? And why would anyone want to pay for this?
So essentially what you're also saying, open banking obviously is facilitating ecosystem and external collaboration, but also internal collaboration, which perhaps was lacking, and therefore getting to better revenue opportunities even for banks. That's
just one point there, one small point there, the internal collaboration, but also the piece about who actually owns the P&L. Who's paying for what? Because you have what I've found in my experience, you have thousands and thousands of APIs, springing from everywhere, duplication, reuse, nobody knows what the metrics are, and you think you're being profitable, but actually it's a false economy.
Thank you. Sure.
Can I just go for it? Just to respond to some of those comments. It's always good to have some healthy debate as well. I think, and we talked about it much earlier in the conference, I think it's about culture, because for incumbent banks, open banking is a compliance exercise, and it's cost me, I'm from an organisation that's funded by the big banks, and they tell us quite often how much it costs, and it's mounting into billions. And so it always has that negative connotation in the incumbent banks, and it's a cost stream, and it's facilitating, because there's lots of innovation, but that innovation isn't coming from those data providers. That data's provided to innovative new firms. And I think the challenge for the incumbents is how do they deal with that dichotomy? That one thing, you're in the box of saying this is a cost, let's minimize it, let's put the B team on it, it'll take a while, but we'll do it really, really cheaply, and it'll be really crap. But the regulator won't shout at us too much, just a level amount. Versus lean in, let's figure this out, and let's innovate and create something new that actually adds value for people.
Thanks, Richard. Biju, while we've all spoken about open banking, 7 million active customers and users in UK, it's a UK phenomenon, but I'm sure open banking is evolving globally, right? And you've also been playing a part in facilitating some of that, right? So how, your perspective on open banking in other countries and how are banks responding to that?
Thanks, Amit. So to begin with, I think it's too early to have an opinion of whether or not it's successful, because 5 years is not a long time in the banking space, right? Change takes time. UK is a great market for open banking. It's been a phenomenal success here, but at the moment, how many countries are live? And the definition is changing. So the way we looked at open banking in the UK was because we had the CMNI mandate, and the large banks had to spend money and publish APIs. But if you look at today, that format is changing. Different countries their concept of what it means is different to what we looked at it, because we have a strict regulatory regime for open banking. So the UAE is launching it now, and they're calling it open finance on day one. In many countries, open banking is considered to be data sharing with some form of consent. I've been in an argument with a bank in the US who said we've been doing it for 10 years because we're screen scraping, and that's not open banking, because in the UK we mandated SCA, which is a critical point. So that definition is changing, and even if you look at the way that RFPs are coming out today, we are right now responding to an RFP from a bank in Morocco, and it's an open banking RFP. There are 10 points in it. The last point is about SCA and FAPI controlled data sharing. The first 9 points are about data consumption back as a fintech. What can I get data back from them? How do I build a new proposition? Can I transfer funds cross borders via an open banking API? And right now you strictly cannot do that. But there are ways to kind of make that work. Right? So that definition itself is changing. A lot of CIOs in quite a few countries will talk about generic API models as open banking. And going by our UK-based definition, that's strictly not the case. But I think that definition will change based on what the world expects it to be over the next couple of years. So today, words that we use a lot today have been embedded finance. We've heard about banking as a service. And then there's open banking, bank as an ASPSP, bank as a fintech, as a data consumer. I think that whole area is getting to be fairly grey now, not by the strict definitions, but if you look at the way the market is adopting it and new business cases are coming out, that whole space of banking as a service, open banking, data publishing, data consumption, and embedded finance is getting to be slightly grey, but it's all happening.
Thanks, Biju. Priya, we all spoke about when Tony of Temenos was speaking, and there are new technologies that are coming up. I think he mentioned about the metaverse. He mentioned about Web3. I mean, and some of talking about integration, and how does all of that integrate into, and then we also have open banking, right? So is there an integration, or is there a benefit of integrating any of these together, or is it already happening?
You mean the new technologies?
Yes.
I would say certainly yes, absolutely. I mean, while we say that, for example, banking has been a traditional industry, and a lot of people said that in this morning. However, there is, for example, still, we talked about commodities as well, right? That we're still selling a commodity. So in order to sell a commodity, you obviously have to be first in terms of market, it very, very competitive, and to be sure of that, you're creating new value for your customers all the time. How do you entice new customers? How do you regain customers that you lost? How do you retain customers that you already have? And I think one of the easiest way to do that is to serve them with respect to what they really like to see, make the experience really frictionless for them. And metaverse, Web3 technologies with respect to data, decentralization and control over your data, I think those are the elements that give you the power and let you basically foster trust between your ecosystem.
Richard, in the previous panel, when Brian was talking also about financial inclusion, and even we talked about financial inclusion being important, right? So, is there a role that financial inclusion is playing, that open banking is helping to make financial inclusion possible?
Clearly, the answer is yes. But I actually saw some stats yesterday. Someone shared them with me that in the UK we've got 21 million customers who are underserved with financial services. 21 million, that's probably a third of the population, third of the population. Shame on all of us, because that's rubbish. Open banking is helping some of that, or actually, open banking is the plumbing that's helping innovative companies solve some of that. Three sort of examples, we've got fintechs like Plum and Chip and Moneybox, and they're looking at your banking data, looking at your balance and your transactions, and they're prompting you, giving you nudges to try and create savings habits. So you get that prompt, oh, you've got a little bit of money left over this month, do you want to stick it in your rainy day pot? Or you didn't spend as much this week. And I think that's really helpful, because that's helping people get on having a repository of value, when the crisis that we're in at the moment, people have a bit of a cushion. It doesn't last for long, but it's a bit of a cushion. On a similar side, on the lending, if you can get transactional data, you can get somebody's history, you can make you can score risk much better, and therefore have a more appropriate price. Now, our collective institutions have been lazy in the past. That's why there are so many people excluded from credit, because, you haven't got your credit footprint, you haven't got a credit score, we won't give you credit, because I can make enough money by lending and doing some quite blunt risk scoring. But I don't think that's good enough, both from profit pools that are untapped, but from just a societal benefit. You shouldn't be doing that. By allowing people access to your transaction history, you're allowing trusted parties to say, look, this is me, this is my financial history, come on, make a proper credit decision, price credit for me appropriately. And I think that's also a key to allowing, it's a bugbear, or it's where I think there's a great untapped opportunity, is point of sale finance. That's historically really, really high priced, because I'll accept everybody and know there'll be a certain credit loss. With the digital economy that we've got, that can be better. And my last point about inclusion was, who are those ones? Salad Money and Scott Cash, I think. They're looking at your transaction history and going, you're eligible for certain benefits that you haven't got. So again, that's another way of helping customers by using data that's available now through open banking. So there's lots to do.
Sure. Biju, I think my question to you is, I think while Richard just said there's a lot that banks need to do, and in order for them to be, make the most of open banking and be in the pole position. So, what are there a couple of picks of yours that banks need to do?
Okay, that's a simple question, right? So, to begin with, we've discussed today about APIs being hygiene factors, about products being commoditized. Now, the key is innovation, but I think what we're seeing now is a application perspective that is distributed. The cloud has changed, right? Everyone's had APIs for years, but APIs are the tip of the iceberg. To deliver APIs effectively into applications that are across multiple clouds, still connected to legacy systems, event-driven, that's complex, right? So what we're seeing is a need to be able to almost view an application environment and rapidly build applications and innovations across multiple commodity systems, event-driven, across multiple clouds, without forgetting legacy. So that kind of distributed, connected, event-driven environment is becoming almost critical. And we've had the cloud, but the cloud today is different to the cloud in 2018. Many people, companies, banks, and even outside banking have had APIs for years, but API capabilities limited to what an individual ISV can give you are not very enabling. You need to have API capabilities across the board, across multiple data centers, systems, entities. Still maintaining data privacy and everything you need to take care of from a GDPR sort of standpoint.
Can I add something to that? I mean, we talked about GDPR, of course. I mean, from a Europe perspective, we are covered. Open banking, of course, raises those concerns with respect to, because we're talking about customer data here in the traditional banking industry. I mean, banks have been famous for holding the customer data, right? However, now when we're talking about sharing that data with third parties, other fintechs, etc., how are we ensuring that the customer is ensured with respect to their data is protected, and whoever is it shared with, then they would also be compliant with all of those regulations. So while GDPR exists, a lot of those data regulation don't exist in the wider world. In that scenario, linking it to the previous question that you asked, Amit, with respect to Web3, I think how I see it, there are three key principles, right, for Web3. One is democratization, decentralization, and self-sovereignty. And if we unpack each of this, then it's democratization of value, decentralization of control, and then self-sovereignty of data. So how do we bring all of these three elements into it so that we can bring open banking to life with respect to, while banks are achieving what they want to achieve, the fintechs are achieving what they want to achieve, the customers are actually, the users, end users are actually empowered with respect to, yes, I know what data I have, what data I have given to you or to somebody else, and when I don't like it, I can actually revoke access to it. And one more really important aspect is selective data disclosure, right? Currently, our data is binary. You either share the entire document or you don't share at all. It would be wonderful if I had the privilege to actually share certain attributes that are really relevant for the transaction as opposed to sharing everything at once, right? And that sort of empowerment actually fosters trust and would not only let the open banking thrive, but also the institutions thrive as well.
Amit, can I add a point, right? So one final point. So we spoke about engagement. I think Brian mentioned it's a very critical angle. Now, two really good examples of that has been probably buy now, pay later, which to a large extent the traditional banking world almost missed. Now, on retrospect, it's not worked out very well because a lot of people have lost a lot of money on BNPL. But another example, Apple's in financial services. In their first week, they collected, what, $1 billion worth of investments, savings. The point is the channels are changing. They're no more within the bank's control. People will engage where it's convenient to engage, and it could be Discord for the next generation. Right? How ready are we for that? And that's where your architecture, your platform, that operating system across clouds, multiple back office systems that are commodity kind of comes into play to deliver those new journeys. So it's not open banking anymore. It's going to be embedded finance. It's going to be hidden banking.
Vinita, to you, I think just to be true to the topic of the theme of our event on core banking, right? So if there's one thing to watch out for the development of next-gen core systems in the near future and linking it to open banking, any comments on that?
I think I totally agree with the discussion that we were having earlier. It's about microservices and the APIs. Now, in the work that I've done in my previous role, a lot of this comes down to, we want new products, we want API-enabled products, we want products that are embedded into the strategic platforms. But ultimately then it becomes saying, here is an innovation team, here is a business product owner which wants this all, go, I'm ready to go, I want, payment APIs, I want, lending APIs, everything should be ready on this point. And then you go get stuck with the core banking pieces, and that says, oh, actually, we aren't across the organization. It's like trying to run a car where you've got different wheels of different specs. To say one can handle the snow, the other can't handle, snow. So you can't run at pace then. So therefore, the technology, the infrastructure is the core bit, right? And we can be extremely ambitious and use words like digital transformation, innovation. But if the enablers, such as the next-gen core banking, isn't in place, you just end up getting frustrated. You keep working through logs and logs and logs and deprioritizing, reprioritizing, saying, oh, that was expected to cost, I was trying to be ISO 20022 compliant, it was expected to cost, 50 mil, but we're already at 70 mil, so something else has to give. So, those conversations, to remove them, you need to get the basics right.
I think that's useful. Richard, you want to add something onto that?
No, I think it is. It's a real challenge that institutions have because if you've got a bowl of spaghetti and you've got to try and unwind it all.
You tell everyone spaghetti.
Yeah. I just think, and it's really easy for us to say, well, you just sort out your core banking because you just change it because it's not that difficult. Surely, I've got a lot of vendors telling me you can't. I think it's a really intractable, hard problem, and I think we have to lean into this. And I think back to our previous challenge, culturally, people go, oh, well, I'm just going to buy something and it's going to fix it. It is about leadership. I think Brian was more talking about that in the previous talk. It is very hard to fix, and the reality is we're going to have lots of open data sharing, and we've just got to change the competitive dynamic mindset that exists.
Thanks, Richard, and thanks actually for reminding us that it's almost time for lunch now. But I think because we have such a senior panel members here and industry stalwarts, so I have any questions directed to any one of them. So I think if there are any questions, I'm happy to get them.
Thank you. Very interesting. It's more of a challenge, really, I suppose, about NextGen. When I set up Sascada, it was on the basis that I'd chaired the big issue for 10 years and been involved in a lot of agri-finance and microcredit around Africa. And it's a phraseology, I suppose, but financial inclusion doesn't work for me. We as core banking providers can provide financial inclusivity. The difference I mean there is that financial inclusion products can ghettoise people in a second-class product. We as core banking providers have the facility and the capability to provide an inclusive product that means that we can deliver to banks who are delivering microcredit and also to banks who are delivering services to ultra high net worth. It's the same platform, used differently, and you allow people then to move along that scale. So I think that's an important part of what we have to do as banks, is I've never met anyone yet who wants to actually be part of a poor person's bank. They want access to high quality financial services, and we have the capability in this room to deliver it. So it's more of a challenge than anything else. Thank you.
Can I respond to that? Right. So we were part of one of the first financial inclusion projects in the world. So M-Shwari in Kenya. It reached 38 million people. It was built on Temenos. We got the bank live in 4 months. So absolutely, I take your point that it's not a core banking problem, but when you put it all together and think of connecting those different commodity applications and delivering a capability that enables financial inclusion, it's possible. And eventually, microservice APIs become the way you do that, right?
And I think we have to be careful with names here, because by even saying nobody wants to be the poor man's bank, actually we've already stigmatized and created something. Actually, you just need to provide a financial solution for a person in a particular situation. The same happens with vulnerable customers, and people go, oh no, you're in that box, right? We've got a special team to deal with you. No, that's just you at a moment in time with the circumstances you got at the time. So we have to be really careful with names. I don't have an answer to it, but it's almost a similar challenge back. We've all got to think about it.
All right, I think we'll wrap here, and thank you so much, panelists, for the very interesting conversation. I hope people found this useful. Thank you so much.